Can Middle Eastern economies withstand slumping oil prices or not?
For a while, within the oil exporters, you have a series of countries now that are below their break-even prices, and there's a difference between a budget break-even price and an implemented budget break-even price, because budgets can be curtailed, meaning implementation on the capex side can be curtailed in many of these countries. So the bulk of them can, certainly the larger ones, Saudi Arabia, the United Arab Emirates, those with large savings, but you also have a smaller set of countries that are now starting to come under some pressure, like Bahrain, like Oman. And obviously this is beneficial to the oil importing economies of the region, which suffer from chronic deficits because of the price of energy. So it balances out really within the region. And what has happened since the Arab Spring is that the region has become interconnected. So economic pressures in one country can ripple through the rest of the region, and likewise an improvement in economic input prices like oil prices can also ripple through the region. So this development is comfortable for Egypt, better for Tunisia, much better for Morocco. All of these are huge importers of energy. It's a little bit stressful for countries like Bahrain and Oman, not terribly stressful yet for countries like Saudi Arabia, Kuwait, and the United Arab Emirates, and certainly Qatar, which is a small population, very affluent country. So it really depends on what you're looking at. There's no generalization across the board. I think this situation is likely to unwind itself over the next couple of quarters, just because it doesn't make fundamental sense given demand from the emerging markets, certainly China. But the Middle Eastern countries can withstand it for a while. Now we're starting to see some weakness on some of the equity markets.
Yeah, and can I ask you about the Iraq situation? Because obviously there's violence is another theme to add on top of this, militant violence, another theme to add on top of what's happening with the oil price. But you look ahead quite optimistically to 2015 for Iraq, don't you?
I think so. I think in the sense that the ISIS threat has been contained and understood by the international community and also by the regional community, and the will is there to do what is necessary to continue to contain it. Now, this is a problem that's going to be with us for a couple of years, but now it's understood. Markets can put it in perspective and not fear it as much, and not allow it to cause as much volatility.
ISIS is constrained. Maybe I'm just misinterpreting every piece of media that I've seen.
Contained.
Contained.
But not in Libya. I mean, you make the point also that it's spreading into new places, and Libya
so
is
it's not contained.
Yes, in Iraq is what we mean. Iraq and Syria, where it is originally based, is where it's contained, and there's quite a lot going on the ground. I think we'll start to see over the next few quarters differences in the way they spread out. You're right that Libya is a worry, but it's not as much of a worry as people seem to think.
When you see the negotiations which have not delivered in P5+1 in Iran, what does that do to the region in terms of relationships? I'm curious about the relationships, about that lack of cohesion at N5. P5, excuse me.
I think it's actually the development with respect to the non-deal with Iran for the time being is probably good for the Gulf countries, because the GCC countries weren't ready for this development when it began, weren't ready for a deal with Iran on the nuclear dossier when the negotiations began. This gives them time to prepare. There was obviously a lot of disappointment in Iran, the fact that there was no deal. But for the GCC countries, it's not a bad thing. I think obviously over the long term it's better to have a deal. However, there are structural changes that need to be made in the economies of the Arab Gulf countries in order to adjust to bringing Iran back into the fold. Obviously, you know, oil markets have to digest this. There's quite a lot of volatility already on oil markets, and I think having the time for oil markets to digest this is a good thing.
Where does this leave asset markets in the region, Florence? I think Saudi Arabia, the stock market, went into a bear market yesterday, down 20% from its highs. Stocks fell across the region because of the OPEC news. I mean, you highlight the fact that Middle East, North African credit markets are outperforming within the emerging market credit asset class. How do we view the region, Lee?
Very idiosyncratically. The region is really a series of countries. So, first of all, the equity markets, to start with your point there, had doubled in value over the past 5 years. So a correction of some sort is not a terrible thing at this stage. They had really rallied quite a lot. Now, we've also seen this before. When the oil price starts to drop, liquidity shrinks in those economies. It hits people in the pocket, and because of the high retail proportion of those markets, you get a correction because your average investor becomes a bit fearful, seeing less liquidity circulating. So I'm not surprised that these markets are starting to correct a bit, and they could correct a lot more if oil prices remain down or slide down any further. Now, the fixed income markets are a separate story in these economies. They are driven by the fiscal backbone and currency stability of these markets, and that is why they're outperforming. 12 and 13 and 15% Egyptian bonds and Tunisian bonds, compared with hardly 10 in emerging markets. One-year treasuries at 12%, in Egypt, in Lebanon, close to 6%, a country that you think is, people would stay away from, oversubscribed treasuries. It's because of the very local investor base and the regional investor base.